One thing that everyone was saying is, as you also mentioned, if the lending focus for these banks goes away or goes down a little bit, maybe there's scope for private banks to come in and take market share. But the timing for that is wrong, right? I mean, look at what's happening in the lending market, look at what's happening in the economy. So private banks will be as selective, if not more, than they have been in the past.
Yeah, that's true. I mean, just because the public sector banks are in a bad position doesn't necessarily mean that the private sector banks have to go ahead and take up all those credit. Few pockets of opportunities here and there could be there. Some of the public sector banks indeed have good clientele. There's a lot of consolidation era which is happening in terms of consortium lending. So earlier, one corporate used to borrow from 15 banks for whatever projects they wanted to do. Now, obviously, they're confining them to 3-4 banks. And clearly, there the private sector banks have an edge rather than giving some of the business to the public sector banks. So yes, some market share is up for grabs, but then even the private sector banks have to be a bit more cautious as to what comes their way with respect to the kind of exposures these PSU banks will be happy to let go of, right? So yeah, they have to exercise a reasonable amount of caution.
Suresh, unlinked to this, I noticed a recent note from you which had cut estimates for private sector banks generally. You want to talk us through what you're seeing in the banking system right now?
Yep. Yeah, so what's likely to happen, Ira, is obviously you saw the latest GDP print number, which is at 5%, way below the economist's expectations, and as per some estimates, it also talks about the fact that if you had used an earlier base, it would have been even 2.5%. Anyways, the point here is that there is economic slowdown, and economic slowdown is broad-based. Retail in India has actually got affected a bit. I'm not necessarily telling that there is going to be a big retail asset quality blow-up or so, but nevertheless, they have seen a historic low level of NPLs. That should actually start inching up a bit on the retail sector, and some element of pressure on growth will definitely be there on the retail sector. And apart from that, clearly some of the things that we are seeing with respect to the auto sales number, with respect to some of the corporate sector stress, specifically in the SME sector per se, that all will cause a problem for the overall economy, and private sector banks are a part of the economy, and given a choice, they will like to exercise caution over growth rather than over compromising growth and going for what I would say margins or anything else. So clearly, in my opinion, growth will definitely get affected. To that extent, we had to cut earnings estimates even for private sector banks.
So broadly, even at the system level, you would now expect credit growth to be what, sub 12% this year?
Yeah, clearly, it will be sub 12% this year.
All right, Suresh.
We'll be lucky if we even touch 10-11%. See, nominal GDP growth this quarter was 8%. Yeah, so I don't know. It's going to be pretty challenging, I would say. Yeah.